This is going to be a homework walkthrough for homework chapter 9-2. We'll start with question 1. Bandar Industries, Berhad of Malaysia, manufactures sporting equipment. One of the company's products, a football helmet for the North American market, requires a special plastic. During the quarter ending June 30th, the company manufactured 3,200 helmets using 2,048 kilograms of plastic. The plastic cost the company $15,565. According to the standard cost card, each helmet should require 0.57 kilograms of plastic at a cost of $8 per kilogram. So first thing, let's pull out some data. So the units is 3,200 helmets. And that's right there. The kilograms of plastic total is 2,048. That's right there. The total cost of the plastic is $15,565. That is the actual cost right there. The standard is 0.57 kilograms per helmet or per unit, and the cost per kilogram is $8 per kilogram. Okay. Requirement 1. They want to know the standard quantity of kilograms of plastic that is allowed to make 3,200 helmets. So to get that answer, we will take the number of helmets produced, which is our units, and the standard kilograms of plastic per unit, which is this 0.57 is our standard. And to find the standard quantity of kilograms allowed for this many helmets, we will multiply the number of helmets times the amount of plastic per helmet. So that is the answer to required 1. That is SQ, or standard quantity. Okay. For required 2, they want to know what is the standard materials cost allowed, SQ times SP, to make 3,200 helmets. So the standard quantity of kilograms allowed, we just figured that out in required 1, 1,824 kilograms. The standard cost per kilogram is $8. So I'm going to reference that. And so to find the standard cost allowed for actual output is going to be the standard quantity, SQ, times the standard cost, or SP, the standard price. So we come up with 14,592 for the answer to required 2. Required 3, what is the material spending variance? Okay, so they told us our actual cost. So I don't have to figure that out. That would normally be the first one in that cute pitchfork picture. That is the actual quantity times the actual price, but they gave it to us in a total. And then we are going to take the answer to number 2, the standard cost allowed. And that's going to bother me, so we're going to go like that. And so the material spending variance just means the difference, this minus this. So there's my spending variance. Now, the standard cost is what I had planned, what I had budgeted, what I thought I was going to spend. I actually spent the actual cost, $15,565. So I spent more than I planned on, so that is unfavorable. Okay. what is the material's price variance and the material's quantity variance? So, yes, okay. So this is straight from the book where they have actual quantity, actual price, actual quantity, standard price, standard quantity, standard price. We just put it in those three. And I like to um, just figure out all three of these first. And then I know it'll be super easy to figure out the price variance and the quantity variance. So actual quantity, actual price, remember they gave that to us as a total, so I don't have to do any math there. Actual quantity, standard price, um, oh dear. So let's see, what did I do? Actual quantity, standard price. Ah, there we go. Okay, so they took and told us the actual quantity was 2,048 kilograms, and that was right here. And then I'm multiplying that by my SP or my standard price. So that times the $8, which I got that $8 right there, right? The standard cost card, $8. So my actual quantity times the standard price. Okay. Now my standard quantity times the standard price. We figured out the standard quantity in required 1, right? I took the number of helmets times the amount of plastic per helmet to find the standard quantity. So times that times the standard price, which would be $8. Okay, now I know to get the materials price variance, I take the first one minus the second one. So AQ times AP minus AQ times SP. And I get that. And now AQ, AP, this is what actually happened. This SP, this is what I thought should happen at the actual quantity. And so what actually happened was 15,565. I had budgeted for or thought would happen 16,384. So I spent less than I planned on. So that is favorable. Um, okay, material quantity variance is going to be AQ times SP minus SQ times SP. And the actual quantity right there tells me this is what actually happened. The SQSP, this is what I thought would happen. And so actual is more than what I thought would happen. So that is unfavorable. Now, just real quick, I want to show you that I could do, so for this one, AQ times AP minus AQ times SP, I could actually take AQ out of both of them, right? Because there's an AQ here and there's an AQ here, and we can pretend like we're in algebra. And then times that by the actual price minus the standard price. So let's just see if I come up with the same answer if I do it that way. So if I take, actually, I'm not going to do this on this one. Just trust me on that. If they give us, if we, let's see, if we divided it out, we would be able to do that. And then This one would be SP is the same. And so it's SP times AQ minus FQ for materials quantity variance. So sometimes some people like to look at it this way because it's easier to remember. And other times people like to keep it this way, the whole thing minus the whole thing. Either way, you'll come up with the right answer. Okay, question 2. Sky Chiefs Incorporated prepares in-flight meals for a number of major airlines. One of the company's products is grilled salmon in dill sauce with baby new potatoes and spring vegetables. During the most recent week, the company prepared 6,300 of these meals using 1,800 direct labor hours. So now we're talking direct labor hours. The company paid its direct labor workers a total of $18,000 for this work, or $10 per hour. According to the standard cost card for this meal, it should require 0.30 direct labor hours per meal at a cost of $9.20 per hour. So this is a portion of an hour, and this is how much we pay our employees per hour, or should have. So first, the number of meals was 6,300. The direct labor hours was 1,800. The total direct labor actual cost was 18,000. And direct labor cost per hour was 10. And those are actual numbers, right? Up here in the top paragraph. Now my standards are, it should take me 0.30 of an hour per meal at $9.20 per hour. Okay. Required 1. What is the standard labor hours allowed, SH, to prepare 6,300 meals? So that is the number of meals, 6,300, times the standard direct labor hours per meal, the 0.30. And so this is the standard labor hours allowed. So this is hours. This is not dollars. This is in hours because it takes me a portion of an hour for each meal or unit. And so this is the standard labor hours allowed. The standard labor cost allowed is going to be the standard labor hours allowed times the standard direct labor hour cost per hour. So my standard was $9.20. So this is dollars. So my standard labor cost should be 17,388. Now, again, I like to figure this, all three of, oh, whoops, I forgot to delete some. Okay. I like to figure out all three of these first because then labor rate variance and labor efficiency variance are very easy to do. So the actual hours times the actual rate. Well, they told me, let's see. Okay, I can figure that out. They told me the total, but I could take the actual hours times the actual rate per hour, and that gives me my total direct labor cost. My actual hours times my standard rate of $9.20 is the middle one. And then the last one is the standard hours, which if you'll remember, to get the standard hours, first we have to take the number of meals times the direct labor hours per meal, which we figured that out in required 1, times the standard rate, which was $9.20. Okay, so my labor spending variance, right? Let's see. Yep, that's what they want first. So they want the actual cost, the first one, minus the last one, the standard cost. And so labor spending variance equals actual minus standard. So 1 minus 3. Now, actual was 18,000. This is how much I actually spent. The standard was 17,388. That's what I planned on spending. I actually spent more, so that is unfavorable. Labor rate variance will be 1 minus 2 in our little pitchfork equals 18,000 minus 16,000, enter. Okay, so actual, this is what actually happened. Actual times standard, this is what I thought should happen for the actual hours. So I actually spent more than the standard, and so that is unfavorable. Um, labor efficiency variance is going to be actual hours times standard rate minus standard hours times standard rate. And that, let's see, so this is my standard. This is what I thought should happen. This middle one is what actual hours times standard rate. And so actual is less than standard. And so that is favorable. Now, what I was showing you before, so actual hours times actual rate, actual hours times minus actual hours times standard rate, both of them have actual hours. So I can take out actual hours times in parentheses the actual rate minus the standard rate, and that will get me the same labor rate variance. And I'm going to be able to show you that on this one. So I'm going to take equals the actual hours times parentheses the actual rate minus the standard rate, close parentheses. And as you can see, that gives me the same answer. So you can do it actual hours times actual rate minus actual hours times standard rate, or you can take actual hours times the actual rate minus the standard rate, and that will give you the labor rate variance. And again, it is unfavorable because our actual cost per hour was more than the standard. And I'll show you on this one, both of these, AH times SR minus SH times SR, both of them have the standard rate. So I can take the standard rate times parentheses, the actual hours minus the standard hours. And so this will be the standard rate times parentheses, the actual hours minus the standard hours allowed, close parentheses, and it gives me that same $828. And again, the standard hours allowed was 1,890, and they got it done in 1,800 hours. And so the labor efficiency variance is favorable because they got it done quicker than the standard. Okay. Question 3. Sharp Company manufactures a product for which the following standards have been set. So standard quantity of hours, standard price or rate, and standard cost. So direct material is 3 feet per unit at a cost of $5 per foot at a standard cost of $15 per unit. And then they don't tell me direct labor, so I'm going to have to figure that out. During March, the company purchased direct materials at a cost of $44,100. So I'm going to put that here, direct materials purchased, which were used in the production of 2,350 units of product. In addition, 4,800 direct labor hours were worked. So direct labor hours is 4,800 on the product during the month. The cost of this labor was $40,800. $40,800. And then they also tell me some variances. So materials quantity variance is 1,500 unfavorable. Labor spending variance is 3,200 unfavorable. And labor efficiency variance is 800 unfavorable. Okay, now I've pulled out all the numbers that they've given me. For, let's see, what do we want? For direct materials, compute the actual cost per foot of materials for March and compute the price variance and the spending variance. So 1A, cost per foot. Well, they told me that there was a materials quantity variance of $1,500, which means, and it was unfavorable, which means I used more product than I was supposed to. And so to get this into feet, I will divide the quantity variance by the cost per foot standard. So I'm going to go equals 1,500 divided by the cost per foot. And remember, those are just numbers that they gave me up above. So this is in feet now. My quantity variance in feet. My standard feet for the units made is going to be the standard, let's see, the actual units times the standard number of feet per unit. So this 3 that was in my chart. So the actual units times the number of feet for direct materials per unit. Okay, so this is my standard, and I had a materials quantity variance unfavorable, which means I used more than I should have. So I will add those two together. Equals this plus this. Now, this is how many feet I actually use. That's still not the answer they're asking me for. I'm getting closer to the answer though, because they told me how much my direct materials purchase was, and now I know how many feet I actually use in that direct materials purchase. And so I will take the total direct materials cost divided by the number of feet that were used. For an answer of the actual cost per foot was $6 per foot. Remember to round your answer to 2 decimal places. So, materials price variance. So first, we're going to figure out, remember, I like to figure out all 3 of these numbers first. And then I will figure out for required 1B, the price variance and the spending variance. So actual quantity, actual price, they told me the total direct materials purchase was $44,100. The actual quantity, well, I can't do that one yet. Standard quantity, standard price. That one's easy to do but remember, so sometimes in this first one, they give it to you as a total, sometimes. And sometimes for this last one, for number 3, we actually have to take 3 numbers to get to this answer because SQ, we have to times the units, times the amount per unit, then times it by the standard price. So units times the feet per unit, now times the standard price per foot. Okay, the other thing I could have done would have been the units times the $15 per unit because this answer right here is 3 times 5. See that? It gives me the same number. So I could do it either way. There's more than one way to get to the right answer. Okay, now I can figure out my actual quantity standard price. Let's see, and we're still talking about materials. And if you'll recall, $1,500 of direct materials that I used too much of, so it was unfavorable. And so if I take the standard quantity, standard price, plus my unfavorable materials quantity variance, that will give me AQSP. So this one's a little tricky because you have to work backwards to get to some of these numbers, but that's how you get those. You use that materials quantity variance, which is unfavorable, and that's why I'm adding things together. Because I used more than I should have. I used 1,500 more than the standard. Okay. Now, price variance. Price variance is always the first one minus the second one. So equals actual quantity, actual price minus actual quantity, standard price. Now, the actual is more than the standard. And so that is unfavorable. And then spending variance. Remember, spending variance is the first one minus the third one. So the actual spending minus the standard. And actual is more than the standard. And so I spent more than I planned on. So that is unfavorable. And remember to read all the red words on how to input your answers so you get it right. Okay, so required 1 is done. That was all about the materials. Now we're going to switch gears and go for labor. Okay. So again, I want to figure out all of these things. So actual total labor cost, actual hours times the actual rate, they gave me as a total, the direct labor cost. That's the first one. Um, and then the standard So they told me the labor spending variance, which would be the first one minus the second one, is 3,200 unfavorable, which means my actual is 3,200 more than my standard. And so I will take the actual minus the labor spending variance because this one is more than this one. And so my number 3 is 3,700, 37,600, sorry. Now, labor efficiency variance, which is the middle one minus the last one, is 800 unfavorable, which means my middle one is 800 more than my standard. And so I will add 37,600 plus my labor efficiency variance. And that gives me the middle number. Now I can answer the standard direct labor rate per hour, which would be, let's see, equals the direct labor hours divided by, hold a second, let me double check that. I went the other way around. Okay. So the standard would actually be equals the middle one divided by the actual hours. So for $8 an hour. So again, that was actual hours times the standard rate because I want to find what the standard rate is. And so I take this number that's in the middle and divide it by the actual hours. So we just had to reverse engineer that problem. Okay, standard hours allowed for production then becomes, so this one is standard hours times the standard rate. So if I divide that one, so FH times SR divided by the standard rate, then that gives me the standard hours allowed for production. And then the standard hours allowed per unit becomes, whoops, equals the answer we got for 2B, which is the number of hours allowed, and we divide that by the units. And remember to round it to 1 decimal place. So 2 hours per unit with my problem. And that is the end of that problem. Hopefully that helps somebody out.